Our editor-in-chief, John Mickelthwait, joins us now on set. John, great to see you.
Well, thank you. Thank you for the advert for the piece.
Well, I feel it is only justified. Walk me through the argument.
The argument, basically, it's quite close to what Clara was just talking about. You look at what's happened this time. The last time that there was a big crisis, when banks stepped in to take over things and move things around, it was against the background of, firstly, people saying this is just a temporary measure, and secondly, against the background where China, the EU, and the US were all working together. Now you've got regional trade blocs. You've got a general sense. Look at what's happening in America with Joe Biden saying repeatedly, buy American, cajoling semiconductor companies. I think a big reason why Silicon Valley Bank was taken over was because it was seen as the main supporter to a strategically vital industry. What is happening is mercantilism, the idea that the state should direct finance, should be behind it. I think that is making a comeback. It is a different, it's early stages, but it feels very different to last time in terms of rhetoric, and that fits much better with what is happening in the rest of the global economy at the moment.
Yeah. John, hey, it's Alex in New York. I really did love that connection, that it was really about saving the tech industry in some respects when it comes to SVB. And then you go on to say that Germany has a huge industrial presence, but doesn't have that juggernaut in the financial system, and that should really trigger Deutsche Bank buying Commerce or UniCredit, for example. Talk me through that thinking.
Well, you look at it. If you're a dirigiste, banking is a nightmare, because, especially European dirigiste. The top 5 banks in the West are all American, firstly. Secondly, as we spotted, they can cause a lot of carnage when things go wrong. Europe has had this problem of being unable to have takeovers, as Clara just referred to it, unable to have takeovers because there are such strong rules basically stopping people, and traditions stopping people, stopping the French taking over the Germans and vice versa. I think it makes it much more likely, if you look at Germany in particular, an industrial powerhouse, much weaker in finance, that now they do think much more seriously about combining Deutsche with Commerzbank, which, among many other things, has got all those deposits that would give, I suppose, Deutsche a degree of solidity. Deutsche has had a somewhat checkered history, a bit like Credit Suisse, in terms of some of the scandals it's got involved in. That's one side of it. But the other side is, why not open it up? If you're going to create national champions, and God knows that's what the EU's been talking about recently, why not look at the idea of combining things cross-border? Rather than putting Commerzbank with Deutsche, you could put it with UniCredit, et cetera, et cetera. At the moment, the biggest, most powerful bank in Europe is BNP, but that probably doesn't bring a great deal of satisfaction to people in Berlin either. So I think it's that type of logic, that type of way of thinking, which is going to push things ahead. And just before just say that, look at America. That is the way that Joe Biden has thought about every single part of industrial policy up to now. Buy American, protect American high tech, cajole people to come and work in Silicon Valley.
If that is the case, if banks become a vehicle by which the state can influence industrial policy, protects, generates stronger areas of industry, do they want the banks to take risk? Do they want?
Well, that is the difficult bit. If you look at the history of finance, and the idea of this piece came partly through visiting a place called the Library of Mistakes in Edinburgh, which I strongly recommend, an entire room devoted to all the terrible errors that finance has made. You have a picture of Nick Leeson's, you have his shirt, the man who brought down Barings Bank on one side, you have Mr. Ponzi of scheme fame, a picture of him on the other side, and lots of books in between. But the underlying idea that it's going to be fine if the state takes a bigger share, look and see what's happening with China's banking market. Once the state starts directing things, you lose something. And that's the eternal problem. If, on the one hand, nobody likes the idea of financiers going out to do what they want to do and then being bailed out. On the other hand, if you have the state running it rather than people trying to create money, it's possibly the wrong way around. Adam Smith, who also lived in Edinburgh, would have certainly appreciated that, although Jean-Baptiste Colbert from France would have argued the opposite case.
John, I read a piece in The Economist, I think when you were an editor-in-chief, and it stayed with me for years, and it was how the solution to one crisis begets the next one. So you fix one crisis, and that, in essence, creates the next one. If we take a look at our crystal ball and say, okay, let's say that this is a solution for this crisis. How does it trigger the next one?
I think China is your answer on that. If we end up with much more state-directed capitalism, you're more likely to find state pushing loans into particular areas. You know, what's interesting this time is actually, yes, they did mend some of the problems of last time. Last time, the problem was you had a sort of vertiginous pile of derivatives of all those subprime loans on top of a tiny bit of capital. When Credit Suisse went down, it didn't go down with a shortage of capital. It went down because there was a liquidity run. SVB slightly the same, and so these are the sort of background of it. And you can see some of the problems they made. For instance, the American regulators only really looking at banks with more than $250 billion. Silicon Valley Bank 200. That looks quite stupid at the moment. The other big issue will be all those things to do with venture capital, to do with private equity, all those non-banks, we write about them a lot in Bloomberg at the moment, which also get involved in lending or providing credit. And that also is somewhere out there, there's probably something in there that will also draw the regulators.
Is what you're describing, and time is a little short here, is what you're describing the end of the financialization of the global economy? It's getting broken up into its component parts. Is that financialization process finally reaching its limits?
I think it's possible it is. I think we could look back at this era and say that really was the end of it. And it's certainly that the reason why it seems more real now is you go back to the last financial crisis, then there really was an attempt by the main powers of the world to think about a global economy. Now China is thinking about the Chinese economy or a regional economy. The EU is certainly just thinking about the 27, almost ignores Britain. And America, you know, Joe Biden in the United States is very much pushing an American first agenda. So you've got a much more fragmented general economy. So the argument goes, why wouldn't finance be the same?